Good evening, ladies and gentlemen. This is Real Estate Trading Frank. It's approximately 8:15 p.m. on the 18th of February 2019. This is a very critical, vital, strategic update on markets, individual stocks, and the overall conditions. These forecasts have overall been extremely accurate and precise, as you all know by now. All the real-time data, alerts, posts, commentary on the markets, primarily trade alerts and charts, are posted on the real-time Twitter feed, which active and both day and swing traders and paid members have full access to, as you know. And reviewing those at the end of the day or during the day is a very vital, is the most vital component of real estate trading. It is a running picture of the markets, but more importantly, we are analyzing all the subplots in the soap opera and the movie we call the U.S. financial markets and preparing you all to do the right thing to maximize your profits, minimize your losses, and act accordingly based on your own risk parameters and your own levels of position sizing, profits, and such that you all do. It's really simple. Sometimes it's good to remember the basics. There is a full disclosure. This is purely for financial education, not for any solicitation or advice. Everyone's on their own. And of course, the real-time Twitter feed during the trading day and sometimes a little bit after hours is almost like ditto trading, which simply means you're almost mirroring what's happening on the trading screens on my side, and it is a constant flow of information which you can take advantage of. You, all my members at Real Estate Trading, as you all know, are never left in the dark, whether it's a good, bad, or fugly market, as we call it in New York. Okay? So you're always connected. You're always being guided to the highest degree of precision within the best of my, I put in my best efforts with good faith and conscience, as you know. And that is extremely helpful to everyone, I'm sure. It is completely up to you. As you know, I'm a firm believer of behavioral game theory. Everything is pretty much mental. You can have all the best tools in the world, but if you're not using them because of your mental fear and the baggage and the obstacles that we all have to deal with on a mental basis, then you're just never going to, it doesn't matter. It doesn't matter. It's like somebody's giving you away a free Lamborghini, or somebody's giving you away a free $3 million house, and you're like, no, I don't want to open the door or start the car. Well, some traders do that, and there's nothing about it. It doesn't matter what you do. They just can't bring themselves to actually actively trade or take a position and such, or manage their positions correctly. But that's something you all have to overcome on your end. I try to motivate and help as much as possible, but that is something I cannot change for you. That is something you have to change for yourself. So, saying all that, again, I will attempt to keep this brief, straight to the point, take a couple of Q&A and wrap it up within the hour. It's been a long and extremely hectic weekend on our side, nothing too bad, but just had to take care of quite a few things on the family side. As you know, I'm a big family guy, like all of you, or many of you, and thank God, always thank God for everything, that everything is moving along fine. So that's it. So I do have to wrap this up reasonably, not go on and on for an hour and a half or more. All right, I'll attempt to do that. So on that note, we have again another very important week. President Trump and the trade team is doing a phenomenal job. From what we're hearing so far, the Chinese delegation on the other end seem to be quite pleased with the progress made. It was just announced right now that Premier I can never say his last name. The vice premier of China, very powerful gentleman, very intellectual and respectful of United States. Lua, I can't say it. My apologies. Is going to be here on the 21st or the 22nd. That is just around the corner. That means he's only arriving on Thursday. for continued trade talks. That's fantastic. You want to keep on talking. You negotiate with your competition, your economic enemy, whatever you want to call it. Just like any other sport. Your opponent is your enemy. You want to defeat them, but within reason. It's a competitive world, and the strongest and the smartest win. That's basically what it is. So, saying all that. He is going to be here. That's fantastic news. And the vibes that came up are from our Treasury Secretary Mnuchin and Robert Lighthouser, our top trade negotiator, seem to have a pretty cordial and direct type of talks. That's what big boys do and adults do. They sit down and they smash out some hardcore stuff, not pussyfoot around and talk behind each other's back. That's what that's what cowards do. Real men, real women, they confront problems, and they try to figure out something which will be beneficial or somewhat of a compromise. Life is a compromise. Trading, world trade is a compromise. Trading, it's a compromise between your gains and your losses, right? So as long as your losses are minimized and your gains are higher than your losses, you're going to move forward. It's just the way it is. It's a compromise. Except your profits obviously need to be less compromised, for a better choice of words. So, saying all that, we shall. So that's happening this week. We have a shortened week starting tomorrow. We have earnings, quite a few earnings. Walmart's kicking off tomorrow morning. We have a small position in the basket of earnings that we're doing. So that's going to be important. Hopefully their sales are not falling through the roof, and their costs from they manufacture a lot of stuff in China, as you know. That's why Walmart prices are cheap. And hopefully they are not the tariff thing hasn't really hit them too hard, and hopefully their profit guidance and such will be reasonably moderate. So we have a lot of good earnings and coming up, which is exciting, which gives us all an opportunity to do some of these earnings trades in a basket, or hopefully sometimes we can do all of them, but pick some of the good ones in there and make some money. These are overnight winners or overnight losers. So point is, the movers on the bigger ones, they move 20, 30, 15, 20, 30 points. As you know, Arista Network was one of a huge winner on Friday. ANAT, that thing just went through the roof. And the calls were up about 145, 150%. So always good to participate in that. One of the things that I have learned is that by doing earnings trades, I found new companies. I don't sit around like old-fashioned traders, or a lot of traders believe in that, and scan 4,000 stocks to see which one's great. Now, there's enough in front of us on our plate that we can trade effectively to make a lot of money. Ideas, are galore. I handpick a bunch of these spec trades and stuff, which also tend to do quite well. They are normally high momentum trades, or we sit on them quietly. That's what we're doing with the Solo, which the average price cost basis is around 5+, and hopefully it goes to 10. We missed the initial part of the run up, but again, earnings wise, companies, what was the company, some of the companies that I've discovered because of earnings, like Hubs, for example. And then not everything comes to mind right now. Even Grubhub, things like even Arista Networks, even though we have played them before. So what happens is when you do the earnings stuff, you all of a sudden getting interested in it, and you get more interested in it if it jumps up and you made some money. You're like, all right, I like it. Here's another little mover that you can trade. Sometimes actively intraday or on an overnight basis or on a swing basis, which becomes again on your focus list. So earnings trades allow you to identify companies which have blown away earnings, moved from one level to another, and all of a sudden not just help us identify a new trading stock, but a lot of Wall Street says, hey, look at that. These guys are now in the big leagues, because where they're coming from, nobody really talked about them. Now they're getting noticed. Technically, they break out, all kinds of stuff, and so that's another positive aspect of doing the earnings trade. Doesn't matter if you have $100 in it or whether you have $1,000 in it. As long as you're in it, your mental amygdala and your neurons in your brain focus in that, and you get to know it. The more you get to know a stock, especially if it's a fast-moving, high beta, high volatility stock, the better you will be in trading that. Just remember that. So always have an open mind to discover new names, and that's why I highly encourage people to participate on these earnings, what we call ER trades, specifically in a diversified manner, diversified fashion, in the form of a basket, so that you don't get completely blown up because one of them didn't work out. So saying all that, we have earnings, we have the China stuff going on. There's a risk always in the market. I'm not mitigating the risks. One of the risks is if President Trump comes hard on the European car tariffs, which is not necessarily a very smart thing to do, given that the Europeans make a lot of their cars here. North Carolina, big BMW, Mercedes-Benz factories, they're going to retaliate also, even though we are their biggest markets. One of their biggest market, the Middle East is also quite big for them, China too, but we are still the largest market for German and European luxury vehicles, or even non-luxury vehicles. You have to keep in mind that that is not necessarily, if we all of a sudden, President Trump tweets that, you know what, these guys are really hurting us and all kinds of stuff, and the next thing you know, that is not going to be very good for the overall market. Again, short term, we get a dip. So saying all that, what we're going to attempt to do right now is the Federal Reserve minutes are coming out on Wednesday. And keep an eye on the Twitter feed. I will put out the economic calendar highlighting the parts of the economic releases, which are going to be important catalysts for the market. Minutes of the meeting from the last meeting. We know the Fed has taken a more balanced approach right now. They're not that hog-wild about raising rates. Home prices have started to come down. Home mortgages financing have come down. Home sales have come down. So obviously they don't want one of the largest components of the U.S. economy, the pillar, which is home buying, to completely stall. In which case the markets will pull back. These are big things. So, saying all that, let us dive into the charts, because they normally give us an early warning indicator of what might happen, or early optimistic indicator where we can go. And we are ultimately technical chart readers here at Clueless A Trading. And so far, like I said, we have a very high accuracy rate versus anybody out there. I'll certainly stand by that statement. Anybody out there on forecasting within a very sharp degree where the markets can go to, where they'll hit the road, the big wall resistance, and where they're going to pull back from and such. Never that easy. Intraday volatility messes with our heads. Look at Friday. Everything was great. Boeing's going to the roof and stuff, and there were some big sellers on the Googles and the Netflixes and the tech stocks, right? So there's nothing you can do about it. I mean, that's just the way it is. But nothing technically really broke. And we were buying to lower the cost average. Didn't feel good on that particular tech side, but we have a nice little position there. And if Google pops up 15 points, you're going to be beautifully profitable. You're going to either run with it if it's breaking above certain levels, or you're going to sell it, wait for it to retrace back a little bit, or see how it does. And of course, I'll be guiding people along the way. That's it. So let's start off with the markets by looking at the longer term charts. We are approaching some pretty serious resistance levels. Don't want to, it's plain as day. You started this market crash, the true ultimate market crash started here back on October 8th. Massive. This is a monthly chart. So it is not, it is completely masking the intraday, daily, even the weekly volatility. Just one blood red candle. It never fell in a straight line, but that's what the monthly move was. And then it hit nice, decent size reversal candle. That's the tail. And then it went higher and then created a doji. And the next thing you know, it went lower. And then created another tail, went higher, crashed well below the Bollingers. These are Bollinger Bands, and anytime you overshoot the Bollinger Bands by any large degree, you can rest assured within 24 to 48 hours, if not a couple of days, you are going to get back into the Bollinger Bands. That's it. Markets trade between Bollingers, and the power of the Bollinger Band you can read up on your own. Go to Investopedia, Google it. The power of the Bollinger Bands, which are telling you the range that wide range that the market can trade in, and this being the widest because it's a monthly chart, can tell you where we can go to, and where we can, what the lower end of the Bollinger is and such. Anytime you have a very sharp overshoot of the Bollinger, right? So here's your Bollinger Band. You are going to pull back within the Bollinger. You don't necessarily need to have a crash, but you will pull back within the Bollinger. So every single time we dropped out of it, we went back into it. We are not close to the upper Bollinger right now. This is just one way of looking at it. The upper Bollinger is at 2862, which is roughly a little shy of 100 points from here. As you know, 100 S&P points is roughly 600 to 700 Dow points. So one can make an intelligent technical assessment forecast that you can hit the upper end of the Bollinger, which is close to this massive resistance. This was the first real thud in the market back in 2018. That was on the 29th of January, right there. This is a massive resistance. That's why you have this green line here, right? Very close to the upper Bollinger, and that's between 2868 and 2877. So if everything goes right on the short term, the China stuff, all this stuff, earnings still, pumping along from our great U.S. companies, then you are going to see the market go up another 600 to 700 points. And those I'm not even I'm not short term. I'm not even looking at that. I'm saying that's what might happen in who knows, in a couple of months, or I'm looking at what's really ahead of us right now. Ahead of us right now is a major resistance level that's at 2821. I've been talking about this for a while now, and that's around the corner. That's 25 and 20, that's 45 points. So you're talking roughly around another 300 to 315 or 320 points before we hit a massive wall right there. Will it get there? I don't know. I'm simply saying that's what it's showing on the monthly charts, and other indicators are telling us that that is a high probability move, because this is still a bull flag right there. So that's it. So that's why you have the monthly chart. I want to go backwards from monthly, weekly, daily, hourly, and 15 minutes, so you guys have an idea. So that's the path market is taking. Markets I've always seen have a very structured symmetry. So that's the reason why, I don't think other services always explain it like that, but what the heck do I care what other services do? It's what I do, and how well I present my work, and my precision content is what I am. My biggest competition is myself, not other services. But I do want to mention that other services never explain the market like we do. So if you look at a structural symmetry, like a kid's coloring book thing, you will see that this is a massive inverse head and shoulder, and if it does follow that, then we could very well drop 800 to 1,000 points like that, and it would still be a massive inverse head and shoulder, what we call IHS. Head, left shoulder, right shoulder, right shoulder. All right? So we have to be aware of these things. This happen on a monthly basis, so there's no way of telling that it is going to happen by looking at the daily charts. Normally, they happen very fast and furious. This is an extremely powerful high vol period, high volatility period on a monthly basis. Do we get into another one of those? I don't know. Its possibility is there, but that's sort of the bigger picture. But in the meantime, we can play these ranges here, and they deliver the, they certainly pay the bills. There's no question about it. So that's your longer term picture. Okay. Here's your inverse head and shoulder. So getting up here, we have a little bit more to go. If it gets there, then it's going to stay between this range. If it doesn't hold, and all this will be on the backdrop of China deal, the backdrop of Federal Reserve policy, whether they're getting too tightening, whether the Brexit risk, forgot to mention that, because they're still fighting over how to do this Brexit in a proper, in a way that doesn't empty the city of London of all the trillions of dollars that foreign banks have there and stuff. They'll just see you later. In the ultimate pain is going to be for the British economy and the British people. So it doesn't matter what Theresa May is saying or whatever. It is what is going to, if it hurts the British economy in a big way, then obviously, different story. So Brexit is certainly a risk, no question about it. So that's it. Enough of the bigger picture. Oh, internally, it is very easy to see the stochastics have now entered the upper end of the zone on the monthly. So if it moves sideways, we're gonna have a multi-month rally, which would be beautiful. That means we would basically zigzag our way up to new highs. Certainly a possibility. Certainly a possibility. No question about it. In that case, the stochastics are going to move sideways. Just the way it did here. Look at this. Stochastics move sideways. The market rallied for months and months. You see, if you don't study or focus on the technicals, every little 60-point drop on the market, manipulated algorithmic high frequency trading, standard back and forth volatility, is going to make you feel that, okay, we're going to fall off the mountain. That's it. So you got to keep an eye on the charts. You know, these whole multi-month rallies that happened from August of 2017 and stuff. How many people do you think actually made money? Very few. They came in at the latter end. Mom and Pop finally started getting excited here. We called it Wave 5. Go back and listen to my videos. We called it Wave 5. That's Wave 5 euphoria. That's when the chat rooms are full. Not like now when the chat rooms are empty, including ours, which is fine. People are busy. Gives me more time to focus on delivering amazing content that you guys can make money off on the real-time Twitter feed. But this is the time that everyone's feeling a little too good. Well, little too good leads to little too very bad. All right. So are we at wave 5 right now? No. Behavioral sentiments, I've not come across huge amounts. They're one of the highest cash levels on the side. That means nobody's really bought anything substantial. Institutions are definitely coming into the market. Short sellers are shorting every single move that's happening in the market. These are good things because, like the old saying on Wall Street, markets rise, markets climb a wall of worry. When there is no worry, people get complacent. We are so far away from complacency. Look at all of you. Ask yourself honestly, looking at the mirror. Or you don't have to look at the mirror. Just ask yourself, are you feeling really good about this huge market rally that was predicated, forecasted, all these great trades that I put through? Are you reaching your performance? Are you making the money you should be making? If the answer comes back no, that means the market still has room to move. It's really as simple as that. So yeah, stochastics, you know, the monthly stochastics, if they move sideways, we're going to have a multi-month rally. If they suddenly fall off like this, then obviously we are going to have a sharp, swift 1 or 2 week or faster correction where the markets will drop anywhere from 600 to 1,000 points. Backwards. Let's look at, this is the weekly. No, this is the daily. Where's the weekly? Oh, that was the weekly. Okay, so I was explaining to you the weekly. Where's the monthly? Ah, that's the monthly. So I was explaining to you the weekly at that point. So this is the monthly chart. So look at this monthly chart from almost 10 years ago, 2009, the climactic debacle, that the huge crisis, which was one of the biggest crises since the Great Depression, financially speaking. Okay, and this is where we were. So look at the channel. We are now, and this is pretty significant, guys, we are now attempting to poke up over, on a monthly basis, over this channel that goes back 10 years. That's a lot. Internals are still saying, hey, we want to poke our nose into the overbought zone. Something so obvious is happening, yet there's talking heads and all these great people, smart people, so-called smart people, Wall Street, and all these other people questioning every move in the market. Oh, we're going into a recession. I'm so sick and tired of hearing we're going into a recession. It's not even funny. And I'm not like some real hardcore, you know, PhD economist from Princeton or Harvard or Yale, okay? I'm just a Boston University Babson guy. 2 great schools, by the way. But I understand economics. Where the hell is recession talk coming from? You go into a recession when home prices collapse, when consumer spending goes into a free fall. But internally, if you look at this chart here, on a monthly basis, nothing is signifying a recession. I don't know. That's it. You know, by the time this idiot's saying it's not going to be a recession, the market's going to be fully overbought. So anyway, let them keep on talking the negativity, because the market loves to climb a wall of worry. And that includes all of you and me. So every time I'm always worried. It's all positive stress. I take my stress, I make it into a positive event. That's it. Take your pain, take your hurt, and move forward, and make it into something positive. All right. That's what I always tell people. And stop moping around. So bottom line is we are breaking over this massive macro channel going back to 2009. Pretty significant. Now we're going to hit this level here, which I showed you on the weekly charts, around the low 2800 levels, where the first wave of massive selling, second wave of massive selling hit the market very suddenly. That was on December 3rd. So obviously there's going to be resistance. But so far, if from a bullish standpoint, and I'm not saying this is going to happen, but at least from a technical standpoint, and I just don't use technicals. I use technicals, fundamentals, my knowledge about the U.S. financial market, my knowledge about U.S. political game theory, international game theory, what reading in between all that stuff. I mix them all up. But if somebody was simply looking at it from a 100% robotic technical point, then they say no, we are going to go higher, at least into the overbought zone before we start correcting. So in that case, we have a pretty fair shot of testing the highs. Well, highs of the market, all-time highs, 2,900 and change. But that's at least what the monthly is showing. However, I think we're going to be big time resistance here, and we shall see. All of a sudden, on the monthly, of course, the monthly takes a month, right? 30 days, 20 trading days it takes. 5 trading days a week, 4 weeks in a month, 20 trading days it takes for this candle to show. But if this candle starts to show some red specks here, like something like this, I can assure you, I will go cautionary. That means some heavy-duty sellers are coming in at that point. So we'll watch that. But so far, this is what we're seeing. All right. So that's your monthly. I apologize. I was looking at the weekly, and I told you I had a pretty, it's running around like crazy this whole weekend. So it's I'm a little bit tired. So saying all that, we have crossed over the channel. That's certainly bullish. Upper end of the Bollinger is obviously the highs of all-time highs. This is a macro falling wedge, and we had pinpointed within a couple of points. That has to be said. We pinpointed within a couple of points. Please go back and look at my charts from that time, which was at the beginning of December, that we would basically come to the bottom of the falling wedge. And that's exactly what happened. It's pretty wild, huh? So 2,300. And then this is happening. Going backwards, this is the weekly. There's your weekly. Apologize for that. And the weekly watching candles, this is another thing I wanted to mention to all of you, and I think you like it because it's simple, is a lot of people watch like level 2, like all these sort of, how much money is going in this and that. I personally think if you just focus on understanding candle structure and movements, which is not that difficult to understand, these candlestick patterns are telling you where the billions are going in. Are they moving up, squeezing the shorts, a doji, showing that, yes, there was some big fluctuations, but then the body remained green? That means the bulk of the billions of dollars which went in that week stayed there. You have an inverted hammer, but the body of the head was red. That means there were sellers on the top. So this is giving you volumes of information and data that you don't need to look at frigging numbers on level 2 and what the big shots are doing and subscribe to services which are telling you what to do. I'm not saying it's do whatever you want. I'm just saying you want to keep your life simple. Focus on understanding how these candles appear, how they shrink, what their structures are, and what they mean. They tell you everything. They do. So I'm firm believer of that. I trade candles for effectively on the 15-minute, the 1 hour, the dailies. I look at the weeklies for directional bias. I look at the monthlies for directional bias. And so far, that's a bull flag. So candles and patterns. Make them your friend, 2 of your favorite things. And you will not have to go through and scour tons of different services or whatever to look at, oh, where are the big boys coming in? Well, the big boys are telling you by these candles what they're putting their money in. Whoever the big boys are. Most of the big boys are pretty stupid, if you ask me. You guys have seen that repeatedly. They're always asking when's the next recession. How many times have you heard these guys at the bottom saying, buy the market? Few of them, very few. Coolest trading, on the other hand. Not that we have the money, but our forecasting is the real deal. So this is pretty good. And we have a little bit more room to move. That 2800 and the low 2800 level, where it completes this pattern. Okay. This has now entered overbought levels. And again, if it moves sideways a little bit, that means the market will have 2 more weeks of a big rally, which brings us into the end of the month. End of the month is actually what? Yeah, 1 week and change, right? 28 days in February. I don't know if it's leap year or not. So that's it. So every time you get really scared, like, oh my God, should I go long on that swing? Look at my daily charts, look at my weekly, look at my monthly. And I try to post them as consistently as possible during the day. There's no point in posting a monthly chart every 5 minutes, right? You post it like at the end of the day or so. The weekly charts are important at this point. So this is so far good. Now, this is the SPX. This is the actual SPX GAN fan. And if you look at it, we are approaching, we broke through, this was, and if the full definition of GAN fan, please read up on your own. I do not have time to explain all this stuff. But the chart is pretty self-explanatory. This is the second, this is the third of the GAN fan, and we are approaching the third of the GAN fan. Where is it? Approximately around 2790. See this line? There you go. Right there. And that's also a level where the market started selling really hard back on the 4th of December. Look at the date down here. So that's why these two lines are put in place for all your benefit, so that you know where the big sellers, automatic algo HFT sellers, are hiding. So far, this is fantastic. Overbought, strong, moving on. This is your daily S&P futures, very important because it's showing you the action on the futures market, which is the most dynamic market during the day and during after hours, and do 24/7 futures trade worldwide overall. Futures are trading right now. Futures are up about $1. China yesterday had a huge 3% rally on trade optimism. Apparently some of their credit numbers were very good, which is good. Last thing you need is the Chinese economy collapsing. It's going to take us down too. It's a global, we're interconnected. So that is good. And you can see here again that this line is extremely critical, and this. You just have to visually see it. So I would consider on a shorter level, on a short-term level for the next week or so, just focusing on this right there. It's a triple top. It's a triple top. 1 second. 1, going all the way back to October, November of last year. 2, see how it hit? Exactly. By the time the third hit, you know pretty much like that's a wall. You know? So that's a major resistance. So here is going to be a major resistance. Now, 4th time, are we going to get out of it? Don't know. We shall see. Weekly and the monthlies I showed you are showing, yep, we can punch through it. I say, let's be on the cautious side once we get to that level. Yeah. And if you do see a breakout, we can play that breakout, but you got to be quick on the trigger to take the profits, because it's going to be fast and furious, like the breakouts like we saw on Friday. How much were we up on Friday? 430 some points. I told you it was going to happen. I explained that too on the basic complimentary new member video, ACS, on the weekend, when one of the members, Bolton, asked me the question, why did the market pop last minute? I explained it. So please review it at your own time. This is a very wide channel, and for people who don't necessarily want to deal with individual stocks and stuff, just play the SPYs. They're good enough. The SPYs were up 660% overnight. That's a sick number. 662%. They went from 30 some cents to $1.60. They went from 21 cents to $1.60 between Thursday and Friday. You go figure. So play the spice. Is it going to be every time 600%? No. But if you're not in there, you'll never see that. Can you always capture the entire 660%? I don't think so. You can stagger yourselves in between, but even if you got 200 to 300%, they're 20-cent calls for God's sakes. And I told people to buy the 5 cents call, they went to 10 cents at the close on Friday. That's 100%. Maybe because we deliver so many heavy-duty percentages, people are getting a little bit, what's the word I'm looking for? They are kind of desensitized. What if I got everyone all excited over a 20% move on an option? Then everyone would be completely excited if something moves 60% or 100%. They'd be like, wow, this is wild, this is great. But everything is like 60, 80, 100%. We're showing 200%, 300% on individual trades. So everyone's getting like desensitized. Oh, it's not up for 100%. Well, a question you have to ask yourself, are you in the trade? That's really what matters. You can't always catch 400% trades, but you can catch decent amounts of those with small amounts of money. And if you really want to gamble, put a lot of money in it, well, then you hit the lottery ticket, thanks to Clueless A Trading. We hit enough lotto tickets, guys. It all depends what your position size is and how you feel about it. If you don't put a decent sum of money in there or something that makes a difference, it's always going to be the same crap. All right? It's always going to be like, oh, okay, made money, but hey. Well, that's your fault, not mine. Just remember that. So this channel is a wide channel. Upper end of the channel, I'm not even going there, is somewhere around 2,900. But that's what it's showing. Now, the further away we move away from these moving averages, which has a big bit, had a huge crossover on the 25th of January, right there. That's why this big arrow is there, right there. Advanced coaching sessions teach all that stuff. This is a 3450 crossover. Extremely powerful. What's it showing you? It's showing you it's a trend change. It's an intermediate trend change, which is extremely important. All this time that the markets rallied, 2,000 points or so, or 1,500 points, the lines hadn't even crossed over. They were starting to turn. They finally crossed over on the 25th. So let's say somebody just sat around and twiddled their thumb, and they saw the crossover and said, okay, this is what I'm getting in. Fine. You missed out on this big move because of these massive candles. This was the 1,000 plus point rally. We called it. I never thought we were going to be up 1,000%. I mean, 1,000 points on the Dow. But I told you, when this happens, the market will go higher. That's when the heavy duty shorts capitulated. They're smart ones. And anytime you see something like that, that's a bull flag. Like, you want to salute it. It's like the American flag up there. You salute it and you just charge the enemy. All right? You shoot the bears. It's bear hunting season when you see something like that. Same thing here. And you're seeing multiple small ones here. They're all bull flags. So far, so good. Moving sideways. I mentioned this to you guys weeks ago. We're moving sideways. There. Want to still keep on hiding the bunkers, ordering diapers for Amazon and Walmart? Good. That's your job. That's if you want to do it, that's fine with me. Never going to make money in this market. When the market gives an opportunity, you got to dive in and do it. Because it gives you ample opportunities. I don't know what people wait for. They wait for the market to top, and then they're like, oh, I feel really good about getting in the market. And next thing you know, bang, down 1,200 points. And they're like, oh, every time I come into the market goes down. Like as if the market gives a crap about us. They just crap about, the algos watch crowd behavior. They watch RET trader behavior, retail emotional trader behavior. They watch it. How do they watch it? With little peepholes in your doors? No. They watch it by your actions. They know when you are excited at the last leg of the technical move and you're putting money in. They're seeing the clusters. That's when they know time to drop the big JDAM. Markets are not fair, guys. That's the reason why we are overall very successful using technical patterns and charts. By the time you feel good, by the time the news is good, it's over. Short term, it's over. Every single time it's been the same. And these are the perfect moments that very few of you, and I will keep on saying it forever, Very few of you ever come into the market. Every time the market drops 100, these are like 100, 200, 300 point drops. Nobody's around. Within the primary uptrend, which is higher. Okay, that's your daily. Next thing we're going to look on is something right here. I'm skipping to the 15-minute chart. I purposely took the time and energy to put these things here so everyone can understand by looking at these charts what these patterns are. Every time that we pull back, had a little consolidation, they're nothing but bull flags. Look at that. I don't need to make this up. I'm just basically breaking down basic and advanced technical analysis and even writing it down for you all to understand. I mean, how much more help can I offer? I can't offer any more. This is like phenomenal. I said that if you have a U.S.-China trade deal, some framework of it as good as the Chinese Premier Li Hua, that's how I finally got his name right, Premier Li Hua coming on the 21st and 22nd, that we'll get up here. Look at this. We'll probably be up there by tomorrow. Morning's open. Right there. You guys know this. I didn't draw it now. Somebody said you want a crystal ball? Well, these are the frigging tactical crystal balls you guys should act on. All right. So saying all that, and that's why we remained overall long going into this week. Now, anything can happen tomorrow morning, and some sarcastic, Monday morning quarterback said, "Oh, I knew the markets were going to go down." Well, I've heard that time a dozen. So your retail emotional brain and those little demons in your head got it right one time for 10 minutes. We still, and then we buy the tactical bottoms in the market intraday and we run with it. And then somebody says, well, I'm sure there's very few of them type of members, but there's real like hardcore dogmatically bearish members. So they'd be like, "Hey, I was right." Okay, hats off to you. What should I do? Give you a gold chain? So gold medal for that because you were right one time. How about being right 70% of the time or 80% of the time? No, just that's it. So saying all that, anything can happen, but this is the range. And futures, who knows? We might open up at 27.85. That means the market will be at least short-term overbought. Does that mean it can break out? Sure, it can. But I'm just saying that futures opening up on a pop, you always sell. Take some profits or take all of the profits. Sit back. It feels good. God's given you, for your hard work and your perseverance, has given you rewards on a Tuesday morning. Market's opening. Take it. Walk away from the screens or sit there and say, okay, I'm going to re-enter this and this. And the ones trying to rush in and getting in at this level, you're going to get smashed. Because the market will pull back maybe 50, 60 points, and you're going to look like an idiot again and lose money. Because you weren't positioned here. You weren't positioned here. Okay. So this is very tactical, very precise levels that I put out there. The 15-minute chart show you what's going to happen on a short-term basis intraday. Squeezing back at it so we can see a slightly broader perspective. This can also be used as a swing chart. This is the big trend line that was violated on the 14th, Valentine's Day, and the huge rally that came. Right, we played that. So now we are basically attempting to go and retest the back end of that trend line. And that is quite a bit higher. That's why I have a blue arrow here. So if we retest the back end of this broken trend line, this one, we are talking about, the same levels, around 28.10, 28.20, which means the Dow Jones Industrial Average should be up about 200 points. And all the main stocks which move with the market that we trade are all going to be higher. So if we go above the trend line, well, then we have to do this. Remember, this is the uptrend line we're talking about, this thick green line. So we do this. There you go. Then we do this. We have to see where we can go so we know where to take our profits or close to it. Then we can say, all right, if we enter the zone here, what we call the bear kill zone, that's when the shorts get majorly squeezed and you get a big fat green candle like this, right? like this, like this is a 15-minute chart, so like the candles don't look that big, but something like this, then we can go to the 2840 level. So that's quite a bit more. That's 400, 500 points more. This is the bear kill zone. If it enters into the zone here, that means the short's going to be like automatic short covering. Machines going into play. Buy, 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 buy. All right. But once it hits here, there is going to be some selling. It might come back and retest this breakout. Remember, this is the breakout level we're looking at, 2785. Once it breaks out, there were immediate sellers will come into play, including me. But if I see it shooting forward, I will jump back in. And then the next level of resistance comes in at 2820. Now, this is for shorter term, 50, 60, 100 point type of moves. So active traders can take full advantage of it. And the swing trader can basically like it, but not necessarily trade it, because if they think that just because we're going to break out of the zone and enter this big channel right away, I don't think that's the way it happens, as you can clearly see. Markets do not go up in a straight line. Markets go up in an algorithmic wave-like fashion, right there, patterns. So that's your 15-minute short-term chart. The 1 hour chart is telling us that it looks pretty damn good. And I explained this also on Saturday's beginner video. So take a look at it. Fast forward to this level. So this one's looking pretty good. Upper end of the move is here. Lower end of the move is here, just in case we pull back. If we pull back from 2778 to the lower end of the channel, it's nothing but a tactical pullback. However, it will drop the market a good 170 to 180 points. So individual stocks will accordingly fall. So we shall see. Otherwise, we will hit support here, resistance here around 2800, and the market will attempt to basically go up here. That's more of a swing chart version. Now, one other one that we're going to look at very quickly, I had it here, which is, where is it? There's your SPX. Now, this is not dynamic because we're not looking at the futures. We're looking at the actual S&P 500, the static chart. So this one is extremely clear. All I did was simply draw the horizontal lines as resistances on points of maximum supply or selling. This is the same chart I showed you before, but here the moving averages are clearly displayed. Now, something happened here on the daily, which happened not on the 25th. This happened on the 12th. What day was the 12th of February? It was last Tuesday, 1 week ago. Tomorrow, we have a crossover. It's clear as day. We have a crossover of the 34 and the 50-day moving average. What we would like to see is this line, which is moving sideways. Let me change this, which is the 50-day moving average. This is the money talk, all right? We want to see the 50-day moving average on the daily start to curl higher. That would be a confirmed trend change or change in trend. All right? Because so far it hasn't. It looks pretty damn good. This is very good. The 34 just jettisoning and crossing over the 50 happened last Tuesday. In between, the markets drop. This doesn't mean that the market's not going to drop on a 1 to 2 day basis. But this is very good. Now, the other thing that's going on is we are getting quite overbought, and we're hitting this first level of major resistance. So the further you move away from the highways, as I've said hundreds of times, you are creating a large standard deviation or overbought condition. One way to look at it, the distance traveled from these highways, the 34 and the 50-day moving average is quite large right now. So it needs to, once it hits over these levels, in my opinion, it will need to pull back a little bit, or these lines have to move up sharply. Either way, this distance has to be somewhat minimized. It doesn't have to touch it, but it has to be minimized, because that means heavily technically overbought conditions are being alleviated, or profit taking has come in. But so far, so good. MACD is looking good. Oops. The MACD is looking good. The stochastics are looking good. Technically, looking just great. Not as great as it looked down here when the crossover happened, and nobody raised their thing like, oh, I'm going to get in. Everyone's just like, oh my God, it's over. The United States of America is finished. You hear this bozos on TV like, oh, it's all over. Our economy's finished. We're going into recession. The Fed's going to kill us. You guys all heard that. Oh, same old story. My favorite line, same old story. You guys are all crouching in fear. I'm showing phenomenal trades and no one takes it. So now we have a little room to move. Not time to get super excited. Still room to move. Super excitement is at this level when nobody's ever super excited. All right, so that's it. This is your 200-day moving average. This blue line here, we just are over it. So if you want to look at the distance travel from the 200-day moving average, then we are not that overextended or overbought. So this 200-day moving average is critical. You hear a lot of people talking about it because 200-day moving average is something that if you break below it, no good. We moved a lot below the 200-day moving average. We just captured the 200-day moving average 2 days ago. 3 days ago, actually, like I showed, on the 12th. Same day that the crossover happened. This line. So we still have room to move to the level, by the extent that I just explained in the previous charts. So that's it, guys. Let me show you two other stuff that are giving me some idea about what's going on. This is known as your SPX 533. It is getting up there, not quite fully overbought, validating what I just showed you guys on the other side, that we still have a little bit of room to move. I could be dead wrong. Maybe we have a lot of room to move, but I don't get that super bullish at levels where the market is technically short term getting quite overbought. Individual stocks, different story. There are many individual stocks which are so far away from the 52-week highs, just about to start the journey higher. And I've showed a whole bunch of them, including some of the biotech stocks like Clovis. Okay, lots of room to move. So this is a weekly, and I will show you the weekly by doing this. The weekly is just the third week that the histograms have gone green. You don't need to know much, but simply these ads. Simply see that when histograms go, like maybe I should go back a little bit, like 11 months. When these histograms go green, they then tend to stay. If the market does want to go higher, then at least a couple of weeks. Each histogram is 1 week. So we are just in a third week where we have gone positive. Like I was telling you guys from here, as I saw these histograms on the MACD shrinking, this was the first tell that the markets want to go higher. Because histograms, when they start to do this, they start to shrink from deep negative levels, they generally tend to go higher as long as these lines are cooperating. There don't need to be a rocket scientist, guys. It is still showing us on the weekly, on this particular chart known as the Swing 533, that we can move up another 600 points and hit the upper Bollinger here. And that finishes this leg of the massive rally. There's another 600 to 700 points on the Dow. We are fully committedly overbought. Mom and pop's starting to feel good. And boom, they're going to hit the market. Mark my words. As before many times I've said. But so far, so good. Third week, we can go another 2 more or 3 more weeks before market gets hit. And by that time, we'll be in the upper Bollinger. So that's what this chart is showing. So on the long positions, whether you're playing the spies or not, you need to basically take all these things into account and stick with the trade. And if you get intraday pullback during the day and stuff, fine, add to it a little bit. Or if you're up a lot, take some profits. Move the strikes higher. It's not that hard. What's hard are the voices in your brain. That's hard. How are you going to take care of that? I have no idea. I know how you're going to take care of that, by doing some smart trades where you feel good and build your confidence. That's how you take care of those little critters and demons in your head which stop you from making money. You know that. Confidence builds confidence. How do you get confidence? It doesn't just arrive in a packet and you open it up and say, oh, okay, here's confidence. No, confidence comes from being smart. More importantly, forget smart. You take that risk level, you look at the chart, you take a little bit of a position and make money on it. That's how confidence is built. I'm going to tell you that, all right? You guys you're not kids, you understand. So that's one. The second thing that I want to show you is the NIMO. I haven't shown this lately, which is where is it? Which is your, there. New York McClennan oscillator. It's reaching, this is the way you read it. And don't worry about this, okay? People who are taking ACS, I'll teach them how to read this thing here. So this is still telling me that it's not fully overbought on the daily. This is a McClennan oscillator. It's hitting the lower this dotted line is a mid-Bollinger. So it's certainly hitting that. But upper Bollinger is when things get really overbought. It's about 101. We're only at 52. This needs to turn, this MACD needs to go green. These are very technical indicators. The green, if it does this, then the markets will zoom another, like I said, 600 to 700 points. The full stochastics are starting to come off the bottom. That's a positive. I repeat again, when you see those massive, massive drops, when I show you that the McClennan, the McClennan oscillator, the New York Stock Exchange McClennan oscillator is below 60, below 90, and in smaller cases below 40 or 30. But when you see below 70, below 90, below 100, I don't give a flying you know what the media is saying. You got to hold your nose. You got to buy. That is those are the perfect moments. And it slips and slides the next morning. But you can rest assured that in 24, 48, few days, you're going to be sitting on a pile of money. So the next time you're seeing the market down 600, 700, 800 points, I don't care, it's not the market points, it's the technicals getting this oversold, you gotta be in there. That's how you build confidence. You don't give a hoot what these guys are saying. What the thing is, you're going to look at this number and you say, oh my Lord, he's showing these McClennan oscillators at 60, minus 60, minus 70. This is the point where things are the cheapest. Fire sale. And that's exactly what happened on December 24th and the following days before that. All right, guys. I'm going to wrap up, and I just want to give you an overall feel on the market and a bigger view. Individual stocks and stuff. A lot of them are on the Twitter feed. If you have any particular requests on individual stocks, you can DM me in the morning. I'll put the chart up if it falls within the criteria of what I look at. Whichever the case, even if it doesn't, I'll put it up for you guys. But lots of opportunity out there. And I just wanted to say something special. This is very important. We have a very loyal member from a while, and she's going through a very difficult time in her life right now, and she's still strong. I've spoken to her, and she's still strong, and she's fighting all the challenges, life challenges that have been thrown at her in the form of her health. She started a GoFundMe, and I will be posting that on my real-time Twitter feed tomorrow, and I'll be retweeting that during the week. So have the goodness of your heart, put in a few bucks towards helping her with her massive medical costs she's going through, and I think it'll be a blessing for all of us. Small thing that we can do. All right, guys? So I'll be putting that out there, the GoFundMe thing. Just put in $5, put in $10, put in $1. I don't care. Put in $100, and just help a fellow member go through a very, very difficult time of her life, and at the same time, her attitude is good, and the mental strength that she has shown will help her in this business too. On that note, have a great evening. God bless you all. See you guys tomorrow. Let's make it happen. All right? Good night.